on the third webinar organized by Aon Inpoint. This call is being recorded, and we have today again a global audience with ourselves, so welcome all across the world from Australia, Singapore, Europe, London, the United States and Latin America. Thanks for joining us. We would like to make you aware that this call is being recorded. You can ask questions via the chat function, so please do so. In 2016, United Nations Secretary General Ban Ki-moon addressed the World Economic Forum in Davos as follows. Our people and its planet are suffering too much. This year has to be the momentum for turning global promises into reality. Governments must take the lead with decisive steps. At the same time, businesses can provide essential solutions and resources that put our world on a more sustainable path. Today's webinar will take you on the journey of sustainability and climate change, and how to take tangible actions ourselves in the insurance industry. With great pleasure, I actually now give the floor to Rowan Dixon, President and CEO of Aon Inpoint. Rowan.
Good morning, good afternoon, and good evening to those that are dialing in from around the world. As Marguerite has mentioned, this is the third WebEx in this series, and I have to say I'm very excited to introduce this session. We've luckily have some fantastic speakers to join us today, and most importantly, His Royal Highness Prince Carlos, who has joined us and will be talking to us about this important topic. In addition, we have Walter Boschart from our office in the Netherlands, Don Proban from London, and Greg Lowe, who is also our head of resilience sustainability at Aon. If we look back to the end of 2019 and early on in 2020, climate change was at the forefront of discussions in our industry. And globally, it was an issue and a topic of discussion. Suddenly, in March, things changed. Our attention shifted to the health and well-being of every single body on this planet as COVID-19 entered into the fray. And it seems a long time ago when we were looking at satellite images of China and India and seeing the before and after effects of the shutdown of industry. It was remarkable to see the smog and the visibility change in those environments. And even looking at the images that we saw of the clear waters of Venice and the impact it had in the shutdown in Europe. Now, as we move into what some are calling a new normal, at Aon, we're calling it a new better. It's great to start the conversation up again. We've got hurricane activity in the Atlantic Basin. We have storms around the world, wildfires in Australia, in the US, all impacting us as an industry. And we've got to continue to make change. Around the world, governments and organizations are taking steps, are trying to drive policy, as we have been for decades. And it seems like we're starting to make some real impact, particularly in Europe. So with that, I'm excited to continue this journey, and I'll hand that back over to Marguerite to introduce the session.
Thank you very much, Rowan. We very warmly welcome His Royal Highness Prince Carlos de Bourbon de Parme. Carlos is director of the Sustainability Foundation Compass and has been committed to promoting and accelerating sustainability and the circular economy in the Netherlands and abroad for many years. Next to his role, he's also serving on various boards as non-executive, and he was recently chairman of the advisory board of the Task Force Short Change. In 1995, he graduated from the University of Cambridge with a master's degree in demography. Thinking about the plastic soup in the world's oceans, the warming up of the atmosphere, the melting of the polar ice caps, the terrible levels of starvation affecting some regions, and the waste in other areas, one might think, what can I do? In 2015, 193 nations voted to accept the United Nations Sustainable Development Goals, and ever since they have been part of global, private and public conversations. Sustainability issues are having an increasingly dramatic impact on people, businesses, investors, consumers, the workforce and governments. Whilst the COVID-19 pandemic, which Rowan already related to, has caused widespread disruption, it has also provided momentum and opportunity to rethink and reconfigure for resilience. Prince Carlos, thank you again for joining us. Can you share with us your historic and current observations on sustainability and climate change? What's sustainability and what are the SDGs and why does it matter for business? I turn the floor to you. His Royal Highness.
Thank you, Marguerite. Thank you, Rowan. I'll try to keep this short and try to place the SDGs in context for you all. Ladies and gentlemen, the core of sustainability for me is, what I think is the most interesting definition of sustainability, is that sustainability is about injustice. And a sustainable world is a just world. It is unsustainable if we take away things, issues, products, materials, and energy from those who have less for us who have more. So if we think about sustainability, I would like to see it in the context of social justice. It is unjust to exploit the world as we're doing it now. And ladies and gentlemen, as Marguerite just mentioned, 5 years ago, the United Nations made up the balance of the last 15-year period in which 191 member states were committed to the previous goals, namely the Millennium Development Goals. That was the first interconnected development agenda in history. In the Millennium Development Goals, there were 8 specific goals. 1, to eradicate extreme poverty and hunger. 2, to achieve universal primary education. 3, to promote gender equality and empower women. 4, to reduce child mortality. 5, to improve maternal health. 6, to combat AIDS, malaria, and other global spanning diseases. And 7, to ensure environmental sustainability. And the 8th is the same as the 16th today, is to develop global partnerships for development. In our post-colonial time, we did development aid, but we did it in a fragmented way. We did it per country and we did it per method. Which led to some serious mistakes. As I'm sure some of you can remember, in the 1980s, we tried to industrialize agriculture in Africa. We sent tractors, which led to little heaps of rusting nuts and bolts in corners of fields when the tractors broke down. We tried to do in the 90s a huge education program to educate the farmers in the developing world. But we aimed that towards the male farmers, while it is the female farmers in large part of the world who do the technical sowing and harvesting of crops. Again, a huge failure. And for the first time now, with the Millennium Development Goals, we had a concrete, clear to-do list for the whole world. And when the UN made up the balance in 2015, they called it the most successful anti-poverty movement in history. The former UN Secretary General, Ban Ki-moon, then said, and I quote, "The MDGs help to lift more than 1 billion people out of extreme poverty, to make inroads against hunger, to enable more girls to attend school than ever before, and to protect our planet." And it's true. Remarkable progress has been accomplished. Yet, around 1.5 billion people in conflict areas and on the extreme margins of society were unreached by these goals and therefore were unable to benefit from them. However, MDG 1, to eradicate extreme poverty and hunger, was the most successful. The target of reducing extreme poverty rates, so people living under $1.25 a day, by half, was met 5 years ahead of the 2015 deadline. And globally, the number of people living in extreme poverty has fallen from almost 2 billion people in 1990 to around 830 million people in 2015. The target of halving the proportion of people suffering from hunger has narrowly been missed. The proportion of undernourished people in the developing regions has fallen from 23.3% in 1990 to about 13% in 2014. And MDG 7, to ensure environmental sustainability, was also a relatively large success. Between 1990 and 2015, 2.6 billion.
Okay, I think we've lost Prince Carlos, or he's frozen. His Royal Highness, I don't know whether you can hear me, but I'll take it back from now, and hopefully we can restore the connection with you at a later moment. What is very clear that His Royal Highness was addressing the issue of social injustice, and clean air and water, equality, safe streets and housing, human rights respected, enough food, a properly paid job, peace, etc. We all know that two key institutions drive it. Government and business make and implement decisions that can have a real and lasting impact on society and the environment, for the better or the worse, and across the short and long term. Government defines and drives policy and regulation, and business defines and drives its own strategy. The Sustainable Development Goals are a blueprint for this model, which were based on the MDGs, as the Royal Highness was just pointing out. A key factor in jump-starting the SDG process is financing. Influential industry leaders like BlackRock CEO Larry Fink have urged the corporate world to meet the needs of society and not just shareholders. We're going to ask my colleague Greg Lowe, who's the head of sustainability and resilience in Aon, to give his views on this. And also he will give his view not only on the operating environment, but also on the regulatory perspective, as well as the imminent need to act now as the financial industry as a whole. Greg, you're global head of resilience and sustainability. Maybe Carlos was just giving us a definition of sustainability, but what's your definition of resilience? Because for me, resilience is a Japanese proverb, and for me it's 7 times falling down and 8 times standing up. Greg, what is it for you?
Thank you very much, Marguerite. I think that proverb is an excellent one. And I think when I think about sustainability, I'm going to use a very simple definition, and that is a sustainable business, a sustainable organization is going to be around 100 years from now. They're going to be able to adapt to all of the changes that take place from a technological, from an environmental, from a sociological perspective in that time. And they're going to be sustainable because they're resilient. They are going to be able to withstand those shocks and rapidly adapt through flexible and agile decision making. So when I think about resilience and sustainability, they're really 2 sides of the same coin, to use an expression. If I might get into what is happening with financial regulation, I'd just like to pick up where Prince Carlos left off. And I think where we see the Sustainable Development Goals in many of these multilateral discussions, they're very much, I think, setting the scene for a set of global challenges. But then when it comes to governments actually implementing, some of the platforms and issues in terms of how these impact different segments of society, in the past 5 years, we've actually seen quite a bit of this fall to the financial sector, and particularly the financial regulators. Many of you are probably aware of a framework called the Task Force on Climate-Related Financial Disclosures, or the TCFD, which was formed 5 years ago by the Financial Stability Board. And this has really been pretty transformational in terms of how a very important sustainable development topic, climate change, and I think reflecting on Rowan's statement at the beginning of this WebEx, is perhaps one of the most challenging and systemic risks the world has ever seen. So the TCFD was really set up to create a framework on how organizations should think about climate-related risk and ask the question, how does the climate impact my business and my business model? But in the time since the recommendations of the TCFD have been released, I think we've actually seen a much more technical discussion starting to evolve from financial regulators. Right now, I'd say Europe is really leading on this discussion with financial regulation, and they're thinking beyond just disclosure. They're really interested in how climate-related risks, both the physical and the transition risks, are going to impact capital allocation, and how balance sheets, are effectively managed to deal with such a volatile and systemic risk. The UK PRA, the Prudential Regulatory Authority, has very much been at the forefront of this topic. We had the first stress tests for insurers that the PRA announced last year for tier 1 insurers. We've already seen a lot of interest in the supervision of boards and how they're accounting for climate-related risks. But this is rapidly spreading outside the UK. I think anyone who's been looking at the news has seen how big of an issue, the Green Deal in the European Union is. And we're actually seeing this getting picked up in Australia, in Singapore, in Japan. And I'm sure some people also noticed that the Commodities Futures and Trading Commission in the United States last week released a report really looking into how climate change is a systemic risk to the financial system. So I think we see these regulators trying to ensure that financial institutions are taking account of climate-related risks, that they are appropriately measuring them, that they are able to stress test them to ensure that they're holding adequate amounts of capital. And I wouldn't be surprised in 3 to 5 years if we start even seeing capital charges being linked to climate-related risk. And while the insurance industry has certainly, I think, been at the forefront of many of these discussions, banks and asset managers and other financial institutions are increasingly a part of the conversation. And I think we really need to think about how interconnected the financial system is, and really the important role the insurance industry plays in creating a more sustainable and resilient financial system. If we could go to the next slide, please. So there's a sense of urgency around this now. And I think the fact that regulators are really starting from scratch and already announcing climate-related stress tests in a rapidly emerging and evolving topic says something about this topic. And we do see banks and insurers really responding to this regulation, something that may not have been on very high on their list of to-do things is now rapidly increasing. So we see a lot of behavior being shaped by regulation, which of course is designed to help shape behavior. And these standards certainly are sometimes extraterritorial in their impact. So while we may have the center of this activity in Europe right now, if a entity with its home office in Japan, Australia, or Canada has a regulated entity in the UK or in parts of Europe, they will be impacted by this. And I think the intent for many of these regulations is to ensure that the global financial system is protected. This has been a real stimulator for many insurers and banks. But then I think, as Marguerite was alluding to, we've also seen how independent of regulation in some territories, investors are also increasingly interested and concerned about the investments they're making being taking account of climate-related risks. And so firms are really thinking about this. They want to be attractive to providers of capital. They're thinking about the impact on their share price. They're thinking about the liability their boards might face, what their employees and customers expect from them. And thinking about the impact of climate-related risks between the walls of their individual firms. And this is a very logical step. It's a very encouraging step that we have many clients, certainly insurance clients, but when I look at our range of insureds, we have a huge number of real estate clients and banking clients asking some of the same questions. But I think that we know what might make sense on an individual level, if done in a herd-like mentality, actually can pose some challenges for the financial sector. So if banks and insurers start trying to incorporate climate risk into their investment or underwriting decisions, what might seem to protect the balance sheet by either adjusting pricing or the amount of capital provided actually could result in some lines of business, some territories, some perils becoming unaffordable or unavailable to finance. And this is, I think, a critical issue for the entire financial sector, but I think particularly for the insurance industry. The reputation of the insurance industry being an unreliable partner, however unwarranted it might be, is very much a reputational issue that we do deal with. And it's important we need to think about the role and the viability of the insurance sector in unlocking capital for the rest of the economy. So we want to make sure that those decisions that make sense on an individual level don't sort of lead to parts of the world becoming uninsurable or too expensive to insure. But we do need to make sure that risk is properly accounted for, which brings us, I think, to this fourth pillar here around some of the residual risk. And that's really about the insurance industry, I think, working more collaboratively with other parts of the financial system and with governments and with our policyholders. Some of this additional risk is going to have to be accepted by society. We need better collaborations with the likes of engineering firms. We need governments to invest in climate adaptation measures. And we need banks to, really make sure that they are taking account of the good activities, including buying correct insurance programs that the companies they're investing in or the individuals that they're lending money to are taking into account. I think there's a lot of opportunity for the insurance industry as well. There's going to be new solutions that are required, both to finance the energy transition, which will require insurance mechanisms to lower that cost of capital, but also to account for, I think, risks that the economy hasn't typically really thought about. Non-damage business interruption, for instance, which can be dealt with parametric products. And we're certainly seeing how COVID has raised the awareness of non-damage BI with our clients, but also helping to de-risk government balance sheets. So there's a real innovation opportunity for the industry, which I think we're all aware the industry needs to get better at. If we go to the final slide in my presentation, at Aon, we're really thinking about this as a three-step approach for all our clients, and that includes our commercial risk clients. That includes Inpoint and reinsurance clients, and also includes our pension fund clients in investment consulting. And I think the first thing that we need to recognize, and really what the regulators are asking, is people need to understand their climate risk. And that really requires a data and analytics-driven approach, which, we have a good number of tools already in the industry, but we also need to think about some more strategic tools like many of the emerging climate models that are coming out from startups. We need data on, where our lending, if you're a bank, of where our lines of business are focused on in different geographies, to think about how these lines of business could be impacted by different climate scenarios. Then we need to actually think about what this means for our balance sheets, how agile are our organizations in thinking about how to adapt their business models, how to protect themselves. And that advisory capability, I think, is really brought to life here in thinking about how you budget for total cost of risk if you're an underlying commercial risk clients, the insureds out there, and really thinking about that balance of risk mitigation and risk transfer. And then finally, there are the capital solutions that are out there to protect balance sheets and, again, make our clients more attractive to providers of capital. And I think this definitely has an insurance flavor to it. And I think that comes back to my point around insurance innovation. But I think we think about capital solutions in a very wide perspective. So that could be the funds that a pension fund is investing in, their asset allocation strategies, and the role of alternative capital as well. And so this discover, plan, and protect process, I think, is a process that actually everyone should be thinking about, and that you should really be bringing your whole team together to consider. These are how Aon are thinking about some of these different topics, but there's going to be a version of this, I think, that is relevant to your organizations and to your insureds who are thinking deeply about this topic. I'm going to stop here, and it looks like is Prince Carlos back yet?
No, so thank you very much, Greg, for your extensive view on sustainability and resilience. Prince Carlos is trying to join us back. I've just been in touch with him, so stay tuned. Interestingly, Greg, you started your career in investment banking. So your knowledge also on the financing end is extremely valuable now for the insurance industry, especially if we talk also about sustainable finance initiatives around the globe, which are gaining more and more importance. The interesting part of what you were just referring to is that actually this is about starting, how do we bridge the gap between good intentions and real business strategy, and then especially in our insurance industry. And this is, of course, then we get to the topic of leadership, which is a very important key role in this whole discussion. CEOs and insurance execs in the insurance industry need to take an active interest in driving progress. And so as sustainability moves up in the boardroom agenda, it's increasingly being integrated into corporate level strategic planning. Management now needs to balance increased regulation, protecting the brand, and ensuring stable supply chains, with seeking opportunity for enhanced performance and using indeed sustainability agenda for strategic advantage. Developing and integrating a detailed sustainability vision into long-term strategic plans are very important in a way that creates lasting value whilst also building public trust. And that's a common challenge for all organizations and all types of organizations. Dom and Wouter, my colleagues, both directors at Aon Inpoint, I'm going to ask you to share your experience in this field in a moment, but first I would like to introduce first Wouter Bosschaert. Wouter has been with Aon Inpoint for some years. Prior to that, he was working for Delta Lloyd, and actually within Delta Lloyd, now owned by Nationale Nederlanden, he was very active in sustainability discussions also with the United Nations. Don Probin is our director who's leading over Aon Inpoint's overall climate change consulting proposition. They both have degrees of very established university. And so Wouter and Dom. Wouter, I first will give the floor to you, followed by Dom. Wouter, please take the floor.
Thank you, Marguerite, and thank you, Prince Carlos and Greg and Rowan, for the introductions, and thanks to the audience, everyone who joined us today. So Dom and I will take you through some pragmatic outcomes of that whole sustainable transition and climate change mitigation that's going on in the world by giving you some examples on, first, for me, the European Green Deal and the effect it has on the European industries, and by that also on the European insurance industry, and to see what position that European insurance industry, or actually the global insurance industry, could take. And Don will take over with some practical examples of the discussions we've had with multiple insurance on this. So Caroline, if you could please go to the next slides. Thank you. So just painting the picture here on the European Green Deal. So the European Green Deal is a ambition of the European Union to become the first block of countries, because it's not going to be the whole continent, that's going to be climate neutral by 2050. And in order to do that, they have set some very ambitious targets, one of which is a transition into 2030, where we wanted to see a 40% decrease in greenhouse gas emissions on 1990 levels. But since this week, that has been upgraded to 55% of greenhouse gas emissions being reduced by 2030. What's going to happen? So the European Union sets out to fund this transition with a €1 trillion financial setup, half of which is coming out of European funds. The other half is by attracting private investments from all over the financial sector. So the idea is at boosting sustainable industries and divesting from unsustainable ones. And key themes we've listed here are the energy transition, circular economy, construction, mobility, and biodiversity. Underlining all those key themes is the fact that the European wants a just transition. So that means that no one will be left behind. And that is important because if you look at the left-hand side on the encouraged and discouraged industries, you can imagine that if there is a divestment going on from fossil fuels, there will be regions in the European Union that suffer from that divestment. So to that order, there's also a just transition fund, which is available for those regions that will suffer the most from this transition scheme. Obviously, not all countries in the European Union are as happy with this ambition as others. Poland is an example of a country that heavily relies on fossil fuel, especially on coal, also for its own energy consumption. There are still discussions going on, but it's good to know that in January of this year, the whole European Parliament voted in favor of the European Green Deal, or at least the large majority, and even parts of the European Parliament voting and making amendments to even upgrade the European Green Deal in its ambitions. So with all that being said, we see that there is a real world transition going on right now. It isn't just the talk that we've seen for decades in the past. It isn't just paper pushing from left to right and incremental changes in the EU budget over year. There's some real hardcore ambition here to change the European Union for the better. So in order to track that change, the EU has set out an EU taxonomy, as it's called, and here I refer to it as the performance thresholds for economic activity. So what the EU will be doing, and it's also asking from the financial sector and the insurance industry to do, is really track the changes that are happening and if they really make a real world impact. Because you can imagine that people will be investing in green bonds, etc. But how do you know for sure that these investments, but also your insurance portfolios, actually provide a better European Union going forward rather than making it a paper exercise? So they've set out a EU taxonomy which monitors performance and also has some thresholds that make sure that you, even though if you're pursuing one of the goals, let's say environmental upgrades rather than degradation or social wellness of a group of people in the European Union, that not costing anything on behalf of other ambitions the European Union could be having, let's say a transition in the agricultural industry, for example. So all that's being measured and weighted. But the implication for the insurance industry as well is that you really need to make clear on how you do this and how your performance is also compared to peers. And not only for your activities within the European Union, here comes the international angle, also for activities that are outside of the European border. So also to avoid those industries that are discouraged and all those activities will take place outside of the European Union. The European Union is looking into setting up a carbon leakage tax to make sure that activities, for example, the coal industry, etc., isn't being transported outside of the European Union while still making use of some of those benefits. And there are some opportunities there. Of course, there are the encouraged industries. So for the insurance industry, it's very important to know what are these industries. Luckily for us, the insurance industry is deemed as a encouraged industry because the European Union is aiming to have a lot more services industries in the future. But also if you look at circular economy, mobility solutions, the energy transition that Greg was talking about earlier as well are some of the main drivers of that transition and real big opportunities for the insurance industry. But then we come to the innovation need that brings with it. And what we see nowadays, and we've had discussions in multiple countries on this topic with insurers as well, is that the level of innovation, whether it be renewable energy, mobility, etc., also comes with a load of problems in terms of ensuring that innovation. Because you can imagine that for some new introductions into the energy transition or mobility space, the insurance products might not be sufficient to cover the risks that come along, or that might not be the historical data that we need to make sure that we have a proper cover of that risk. So what role can the insurance industry play? And then, thank you, next slide. So we've looked at some discussions that are going on right now on because of the EU Green Deal, but also because of the effect it has on some local national planning, for example, in the Netherlands, but also in Germany and France. And we identified 4 key roles that the insurance industry could already play, and some of the insurance carriers in Europe are already taking up that role. First of all, obviously, is insure. That might sound easy, but we, on a monthly or almost daily basis, encounter problems with insuring new solutions, for example, in the insurance energy transition space. One very prime example is insuring rooftop solar. All over Europe, rooftops are being used to install solar panels, but lo and behold, because of new introductions of isolation materials, that combination of isolation materials and those solar panels isn't the best combination when it comes to fire hazard. So you can imagine that a lot of insurance companies say, okay, well, that combination of solar panels and that combination of isolation, we're not going to insure anymore, or they are going to upgrade the premium, which immediately gives a problem to the owner of the property. So in order to play a more important role is also to facilitate those discussions more upfront. What we see now is that, for example, when buildings are being renovated under a new Green Deal scheme or local or national scheme to become more climate neutral, the insurance company is being informed sometimes in a very late stage about the upgrades in terms of solar panels or isolation that goes on in current buildings. And you can imagine that if you are more on the forefront facilitating those discussions nationally and facilitating those ambitions together with the banks, together with the real estate owners, together with the contractors, you would have less problems of discussing or ensuring that in the end. And that is also has to do with setting standards. So you can imagine that with the experience the insurance industry has in those risks, we could be setting standards together with those parties to make sure that people know up front what they're up against when they try to renovate or innovate or go in on the flow of the transition. So to increase momentum, I would really say that the insurance industry could be a bigger part of that whole discussion. Really be on the forefront of change. Now we see that we're in some areas still in the back seat, also because of prudence. But I think in order to make sure that we as an insurance industry play that integral role that we can play in that transition and in the EU Green Deal, we should move faster than that we're doing now. And we can, actually. And to that point, my colleague Dom Probin will be introducing and discussing some of the discussions we've had over the past years with our insurance clients. So, Dom, over to you.
Thanks, Wouter. As you've heard as a group, we've been working with carriers on climate change for a long time. And in addition to the dynamic that Wouter, Greg, and Prince Carlos have outlined, I want to tell you a little bit more about what we see individual firms working on now and what I think we collectively are finding most challenging. With that, I think we can move on to this last slide. Yep, that's perfect. So in discussions with carriers, we've repeatedly come back to questions around 3 areas. 1, strategy. How does an insurer make climate change a truly strategic topic in the firm? 2, analysis. What analysis data tools does an insurer need for the many different activities they need to work on? And thirdly, execution. How can firms engage and work with employees, broker partners, and insureds to embed policy and solutions? So I'm going to share some reflections and thoughts that I hope are useful on each of these questions. So on strategy, strategy around climate change is not only about managing risk or upholding your own firm's reputation with a solid regulatory response. It is about capturing opportunity. To do that, insurers need to make sure they are encouraging activity that is aligned to their objectives and avoiding a collection of tactical activity which might be taking different parts of the business in different directions. It's worth noting, I think, that whether or not you write down and communicate a coherent climate strategy or you don't, your colleagues will start making climate decisions. And I think when I think about a strong climate strategy, I think of engagement from across your business and at board level. What do different people think and believe about climate change, and what does it mean to your firm specifically? I think of taking a position about the impact that your firm want to have on the topic, and for employees, policyholders, brokers and investors, what will your firm do for those different groups? Communicating that position to an audience to empower them to work on it. How do your beliefs and desired impact translate to policy, underwriting appetite, and to your product and service offering? And finally, I think of an organization that, simply speaking, can make and enable, climate decision making. This is a hard thing to do in a bubble, and external insight and viewpoints are powerful. Aon, we are happy to help here. Onto analysis. Climate change is a vast topic and a dense one. It is okay to find it daunting, quite frankly. Some of the insurers we've spoken to, particularly those who've been at this for the longest, say that it is, hard in places and increasingly complex. There's analysis for strategy, there's analysis for physical risk assessment, there's analysis for assessing transition opportunity. There's analysis for expected loss, there's analysis for changes in asset value, there's analysis for economic performance when it comes to investment. I mean, the list goes on. I think the thing for the audience to take away here, and this is what I take away, is that there are specific tools and techniques for specific jobs. There are horses for courses, so to speak, and those different tools and techniques should be deployed with an understanding of their strengths and limitations. I mean, Greg talked about one of the investments that we're making around partnering with climate economics businesses. We're partnering with academics and developing, our own proprietary tools at Aon. We all feel that as such, we have a good view on what horse should be used for what course, so to speak. So that brings me on to execution, the last of these areas. Climate change decisions are being made now, whilst relatively few underwriting and investment restrictions are currently in place and stated publicly. Underwriters are associating price increases and adjustments to their appetite with climate change and ESG more broadly. Carriers are also, positively launching new solution services, investing and creating business units, especially to research and launch products to capture opportunity. And on product development, I hope that this is on a lot of people's minds, a lot of the audience's minds. And, I think it's through establishing an effective feedback loop with brokers, but also policyholders, that you can ensure things that you're looking to provide to the market are valued. And again, this is where, we're really excited when carriers reach out to us to see how we can collaborate on that area. It's on that point of collaboration that I'll sort of close really and hand back to Marguerite for Q&A.
Thank you very much, Dom. Strategy, analysis, execution. It's all based around a lot of data, which we have been gathering as Aon Inpoint. But before I go to the Q&A, it's almost like a cliffhanger, Prince Carlos, whether you're back online, but you've been back online. Thank you for joining us back. When it broke up, you were talking about the conversion of the MDGs, the Millennium Goals, into the SDGs. This has resulted in a lot of activity. And we've seen that data is more and more important to measure and monitor the current status. Frans Verhouten, the CEO of Philips, earlier this week also announced a statement. He wants to not go for 1.5 degrees Celsius in his vision for 2050, but to 2 degrees. And data are very important. Mentioning CEO of Philips, it's important to mention here that leadership is key in this. And I'm very interested, I think the audience will be also, what are your views on leadership to actually address social injustice? And what's the role the insurance industry can play? Prince Carlos, back to you.
Dear Margaret, and yes, thank you. Very sorry that, but I had a power failure, had to switch laptops. Yes, we are moving into a world where transparency is becoming more and more radical. There's this world, data is the new gold. That is obvious, and what you see now is that those companies who do not build up a resilience towards that transparency are going to have it very, very difficult. And I think key in leadership is the authenticity. And I see that those companies who have integrated SDGs and ESG into their core business survive much better in a moment of crisis. I'll give you two examples. Volkswagen with their Dieselgate scandal did not fare very well, while Unilever with their tea scandal did extremely well. The course of Unilever dipped with only 2% for a couple of weeks and came back up. And we've all known what the stock of Volkswagen did in the moment of that crisis. And the difference was the authenticity of a leader like Paul Polman was very clear. Everybody believed him when he said, I'm sorry, this is a complex issue. We're looking into it and we will solve it. Everybody believed this man. Nobody believes the CEO of Volkswagen when he came with no excuses whatsoever. So I think this age of radical transparency is something that we should keep in mind. And the only way to really deal with that is to be able to bring in the values of the SDGs and ESG and all these, not just the old school CSR. I'm talking about more serious values which are represented in this world agenda, which is, again, the first time that we have a world agenda for the development for a better world. Don't forget that instead of a fragmented approach, we now have a concrete unilateral approach. And I think that if you take that into the core of your business, you will be more resilient for the future.
Yeah, thank you very much, Carlos, for your reply. So you're actually referring to something where straight away I'm going to, everybody, by the way, the audience, please feel free to send in your questions via the chat function. We did receive a question because His Royal Highness was mentioning the ESG, environmental social governance, plays more and more importantly a role. Greg Lowe, my colleague, the question to you will be on this topic regarding to ESG and climate change. Can you actually give us some observation how they relate to each other? Often, sometimes, they're being used in the same manner. What's your vision on this? And again, can you translate this also into the insurance industry in particular? Greg.
That's an excellent question, and thank you very much, Marguerite, for sharing that. So I think ESG, climate, both very hot topics at the moment, and obviously there's a lot of relationships. ESG, just to remind everyone, is environmental, social, and governance issues. And of course, climate change is an environmental issue. So you can say that climate change is an ESG issue. But I think when you look at all the other ESG issues aside from climate, be that diversity and inclusion, be that sort of the way you manage human capital, the way you have independent governance in your organizations, these are all equally important issues. But I would say climate is so systemic and does not really have a beginning and end in quite the same way that some of these other issues do, that it almost sits in parallel. I think of ESG as pre-financial risks. They are risks that have financial impact, but they're really about your operating environment. Climate is also about the operating environment, but it really kind of goes into everything we do. And we've built our societies and economies on the assumption that we have a stable climate. And I think, this even goes for the insurance industry. We recognize extreme events, but we expect them to follow a particular pattern. And climate change, I think, throws that assumption out the window. So we need to think about how that systemic change impacts our business models. And for insurers, that goes down to, I think, what Dom and Woto were saying. It impacts underwriting. It impacts, capital decisions, and it also impacts what's happening on the investment side of the portfolio. I'd say for the insurance industry, ESG has probably gotten more attention from the investment side of the balance sheet than it has done from the underwriting side of the balance sheet. But I think that's starting to change.
Yeah, so thanks, Greg. Really appreciate a very insightful answer. So the next question I have, and this is one maybe for Wouter, Dom, and Greg. Two questions, actually. What are the practical things that carriers can develop and communicate? How can they communicate their strategies? And the other one, which is also quite interesting, because I know we're very developed on what's the best analytics tool out there for climate, or tools. So I'm just looking at who would like to take the question. Dom.
Margaret,
Okay,
I'm happy to answer that first one. So in terms of the practical things that carriers can do to develop and communicate their strategy, well, I'm sure that many of the audience who are working in the sustainability space and the climate risk space will probably say legwork, and there's truth in that. It's about getting around to lots of different stakeholder groups, 360 across the business, identifying those accountable individuals in your firm, and also having a forum where people can come together and work on this, think about it and make decisions. I actually believe to some extent that talking about this is more important than crunching the numbers at this stage. And surveys are good as well as a comms tool, but the data can be powerful. Employee sentiment is very important, especially in younger segments. And in terms of communicating outwardly, I would encourage everyone who isn't already thinking about it to do something like a mission statement, a declaration. We often talk about good examples, look at everything that's out there, and take example from others, but think about what it means to you specifically.
Yeah, Dom, before you go into the analytics tools, I'm not sure who's going to take that one. There's a question coming in, and I wanted to pose it straight away after you've answered this. How do you see insurers approach or integrate ESG practices, and especially and particularly the E, into risk selection and analytically based underwriting decisions? Not just focusing on exclusions, but to industries, but also a proactive approach. Thanks for the question in the audience.
I can take that one, Dom.
Yeah, let me.
Sure. So what we've seen as well, and we've partnered with a company called Climate Service, and that's something that Greg Lowe could elaborate on after I'm finished. But what we see as well from an insurance side, we're collecting a lot of data and databases. So proactively, you can think of solutions like parametric insurance. What we see with sea level rises, but also with hazards in the climate space becoming worse and worse, you can imagine that you have the parametrics in place as an insurance company to proactively ensure, for example, delay in building your offshore wind farms because of the wave height is too high. So you can set certain parametrics on when the wave height is above a certain number of meters, that you automatically have a business interruption product as an insurance company kicking in for that contractor that builds that offshore wind farm. And these kind of solutions are already out there in the agricultural industry. They're out there as well in terms of crop failure. You can use satellite imaging. So there are multiple ways of using data analytics that we have nowadays to automatically ensure or on a larger scale ensure these kind of hazards in the ESG space.
Thanks,
Walter, Marguerite, can I just add on to that? So I think it's, and it's fantastic to hear from everyone on this call. I think it's also important to note that communication with your clients and with your brokers or intermediaries is key. And there's been a number of decisions made by our clients or insurance markets over the last 5 years that have led to a lot of uncertainty and a lot of tension in the marketplace by clients, by industries. Whether that is the oil industry, whether it's coal, whether it's whether it's renewable. Without a clear mandate and a clear communication strategy, it leads to a lot of anxiety. Insurance and capital and risk sharing is a key component for us as we drive forward as an industry and as a global economy if we're going to make this work. So I think that's an important kind of piece that we should really come. As you're developing the strategies, use your working groups, use the communications, use your connectivity to help define that and take away some of that uncertainty. And it really will help, deliver in the future.
Thanks, Rowan. I'm very conscious of time. I do have more questions coming up, so apologize if we're not addressing your question. But in order to make sure you all can join your next hour's meetings, we would like to make sure that for today we woefully thank His Royal Highness Prince Carlos for joining us. As you all can see, and you might have listened, he's a very, very profound promoter of sustainability, extremely active, extremely knowledgeable. Carlos, thank you so much for joining. You were very fact-based with all your data and facts, which we really, as Aon Inpoint, which is a management consultancy firm, which we really like. Thank you very much, Greg Lowe, for joining, our Head of Sustainability and Resilience. Extremely knowledgeable. For those people who are interested to listen to him more, he's also appearing this week in a LinkedIn webinar. Thanks, Dom and Wouter, our directors. Clearly you have knowledge around how to put a strategy together, how to give our insurance companies who are still looking for some more fine-tuning on this one, how you can help them. Rowan, thank you so much, our President CEO. Thank you, Caroline, for pushing the slides. And to finalize, I would like to give you these observations before the weekend starts. So literally and metaphorically, the world is on fire. It is time to act now. As Greta Thunberg and next generations action climate change, future generations may well have occasion to ask themselves, what were our parents thinking? Many of us on this call are parents. Why didn't they wake up when they had a chance? Solutions to the climate crisis are within reach, but in order to capture them, we must take urgent action across every level of society, including the insurance industry. In addition, it's become today again increasingly evident that a sound sustainability strategy protects a company's reputation. It drives innovation, employee engagement, satisfies customers, and attracts and retains top talent. It demonstrates compliance and leads to market differentiation, all key ingredients for long-term growth and profitability. To close off, for all of you, a quote from Stephen Covey. We're not a product of what has happened to us in our past. We have the power of choice. For us, thank you very much for joining us today. We wish you a lovely weekend. This webinar is recorded and we'll share it accordingly via email. Thank you again and have a lovely weekend. Thank you.